All right, what's going on, ladies and gentlemen? It is your boy Henry, and welcome back for another market update. So the first thing we're going to do is we're just going to be cleaning off our chart because we have no need for these anymore. I believe that green line has no use for us anymore because we did fill the gap. Did we fill the gap? Yeah, we did fill that gap. So we will put a new green line on, and that will be this gap fill, because now we have an upper gap fill. And as I mentioned the other day, we did completely skip through QQQ's gap fill, which was, and that's hilarious, dude. Like, the selling pressure was so strong that you completely skipped through a whole gap fill. Like, that is absolutely insane. All right, yeah, you completely skipped this one. That's funny, guys. It's very funny. All right, it's funny. But yeah, this is now going to be acting as an upper price magnet, and let's just clean it up a little more. Do we really need everything going on? Okay, so we have the bump and run target right here, so we're going to delete what we got playing out up here. We're going to delete that. We're going to this stuff up here. Do we want our big ass trend line here? No, we can get rid of that as well. All right, and then is that everything that we really needed? We can get rid of this as well. I'm interested to see what happens here. Do we come up and we literally flip this level here? Like, is that what's going to be happening? I don't know. Okay, but I do want to talk about in this video. I'm going to make this video pretty quick because I don't have too much time here. We're going to be talking about the Jackson Hole Summit and what we think is going to be happening going into that. Okay, so I just want to bring everyone back to when Jerome Powell said that markets are too elevated. And I just want to remind everyone where that was said. That was mentioned in the 380 to 400 level on SPY. Look where we are right now. We are well above that level. All right. So I'm just saying, if he thought markets were elevated back then, we are like, I mean, he's definitely saying markets are elevated now. Okay. So this red line, if you're new to the channel, this red line is just when we have that Jackson Hole Summit going down. So we expect some price action to be happening going into then. But again, I don't know what's going to be happening going into then, but we can just use the information we have, and that's what we got. Okay, like Jerome Powell back in the day said that markets were overvalued. Okay, they're elevated and they were at elevated levels. And I'm just going to introduce you, well, not even introduce you guys, I'm going to remind you guys about the wealth effect. Okay, the wealth effect. Now, what is the wealth effect? The wealth effect is literally just, okay, when people have more money, they're going to spend more because they feel wealthier. Okay, they feel like they have more. All right, and therefore they have more to put onto output. Okay, more incoming, more output. All right, but it is bad when you are in like the worst situation possible. Like, this is a recession that has been caused by inflation. Okay, inflation is at 40 to 50-year highs. All right, maybe it's at all-time highs. I don't even fucking know, but I do know, like, it has not been this high since the 1980s. Okay, and what happened? Paul Volcker came around. Now what can't they do? I talked about in the last video, they can't Paul Volcker the market because their debt is going to just be at immaculate interest rates. Okay, like, they are not going to be able to pay their own debt. Okay, and when I say they, I'm talking about the US. So that's why I don't know if we are going to ever see the federal funds rate go up to 10% to 15%. Like, I think it got as high as 20% when Paul Volcker was in office. Okay, or not in office, but when it was his term, when he was in Powell's position. Okay, so I'm not saying any of that's going to happen. What I am saying is, dude, they're probably going to be trying to hike these things up because the wealth effect is a thing, and like, it's just fueling the fire. Okay, I'm just saying it is not something. If I was going to be in Jerome Powell's situation, okay, going into Friday, something that I would probably be bringing everyone back down to earth. Okay, but what I also said in the last video is what we have learned in the bear market is that things happen around Jerome Powell. Okay, when Jerome Powell speaks, the market likes to hype him up. Okay, and that either comes from you getting hyped up going into him speaking, or it gets hyped up from something he says, and boom, the market starts rocketing. Okay, now what we can do is we could look at the oscillators and just see what is probable. Okay, what's probable going off of our daily time frame here on SPY. Okay, if you don't remember what these are, I do have it right there, FOMC. And we are almost to our rising wedge target number 1. Or no, we hit our rising wedge target number 1. I just did not delete that. I don't know why I thought it was that line. But yeah, guys, the wealth effect, I'm just saying, it's fueling the fire, and they're not going to be able to put out a fire that just keeps getting fuel thrown on it. And it's not like a normal condition. Like, we've had recessions in the past, okay? This is one that's literally being caused by them printing too much money. And now we're in times where the Inflation Act is coming out, and you can strictly thank the midterm elections for the fucking Inflation Act. That is an absolute oh, holy shit, abomination of an act. I don't understand how politicians get away with what the fuck they're getting away with. How are you going to call someone something an Inflation Act when they did a study on the fucking act and said in 9 years from now, the best case scenario is that it doesn't cause inflation. All right. So do the math. All right. Do the math on how many people they're going to be providing this 10,000. You can go watch me, Kevin's video. That's where I directly got the numbers from. Okay. I'm not using his numbers. I'm just taking the numbers that he mentioned in his video. I think it was like 48 million people are in federal debt or something like that. Okay. And they're going to be providing $10,000 to each one of those individuals. Let's do some simple math on how much they're piping up inflation right here. Okay. How much are they printing and introducing into the market? And keep in mind, we are in a Keynesian system, so everything runs on debt. So they have to do what they're doing right now to keep things running, but at the same time, what they're doing this and to keep things running, it's also slowing things down. And like I said, they can't do what they need to do, and it's gonna fuck themselves along with the whole economy that they're trying to nurture. Like, you guys remember what I said the other day about a baby? It's like a baby, okay? You've been feeding this baby drugs. And yes, I know, bad example, drugs, babies, they don't mix. But just anyone, okay? It's a kid, all right? You've been feeding this kid drugs. Now he has to be taken off the drugs, okay? And you know that's the only thing that can happen, or this person's gonna fucking die, okay? If you don't take someone off of drugs, they're just gonna keep going further and further and further. And the way drugs work is you keep having to take more and more and more, and then the person eventually is going to die, okay? That is the situation the U.S. economy is in, where we are going to fucking die, and they know that, okay? But they need to do something about this so we don't die. But the thing that they're going to do is going to crash that person's system. The drug addict that has his drugs taken away from him for his own good from his family members, he's crashed for, like, let's just say he crashes for a month, okay? But in reality, no, the economy, it's not like that, okay? It's going to crash for like a year, okay? Maybe even 2 years, all right? I don't know how long how long that effect would last, okay, the tightening cycle, but I could say I have not experienced it, and we've seen the market absolutely skyrocket. And yeah, guys, like, it's seriously rough, okay? And we have not seen a tightening cycle since back in 08. All right, and we all know what happened back in 08, okay? We were supposed to have a recession over here in 2018, but no, what'd they do? They did exactly what I just, or not over here. They did exactly what I just said. They gave the baby more drugs, okay? Or the kid. We switched to the kid because baby, maybe that's not appropriate, okay? But yeah, guys, that is what they're going to have to do at some point in time. It's guaranteed that they will have to do that. They can try and trick the market all they want, but they guaranteed will need to do that, or inflation will continue spiraling out of control. And as I mentioned in yesterday's video, we are fucked, okay? If these other countries are fucked, it's because the U.S. is fucking them, right? Okay? And we can only push the bucket or kick the can down the road for so long until what I just said happens. Like, dude, we crash the person. The economy is the person. We crash this addict, okay? And we are going to set him on a good course after that for years of prosper, okay? Years and years, tens of years, okay? Exactly what we've seen in the market, but we have to go through that rough couple months, okay? That months, years, whatever, how long it takes, okay? We have to go through that to get out on the other side where then we can prosper, we can grow again, okay? But right now, no, we're not growing. We're just like, okay, when's the next time we're getting our drugs? That's when the market is going to be going up. That's how I see it. Okay, you guys don't have to see it that way. I know for a fact, I've never seen anybody describe the market or heard anybody describe the market like that. But in reality, that's exactly how I see the market, okay? The market is literally just someone that is addicted to drugs, and they've been addicted to drugs for years, and they know they're going to crash when they take away these drugs, but they want the drugs, okay? And that's like, it gives them these spikes, it gives them these highs, okay? And when you take them away, you're going to get some really negative action, okay? You're going to get some really bad action, but it's what is needed to finally start growing again, okay? If you don't take them away, we're probably not going to be breaking this level because we're not going to be able to grow, All right, so if you guys want to hear me out on this and hear this theory, I guess we could call it theory. In reality, this is kind of just logic. Okay, straight up, this is going to happen at some point. It's guaranteed they're going to have to hike rates more than the fucking expected amount, which go to me Kevin's video. Dude, the expected amount I just found out is 3.5% by the end of the year. Dude, that's half of inflation. They're not getting inflation down. I talked about this in the last video. They can't get inflation down unless they put the rates over inflation, but they also can't do that just because of everything I just described. All right, so let's get on with the TA, okay? The daily chart, okay? The daily chart is suggesting that we're probably going to be heading up, but I want everybody to keep in mind that something like this can be happening where we have the CCI down here. Now, I mentioned that I'm not expecting us to start bouncing up until we come down here, okay? And we can go visit the weekly chart. I told you guys that we are just getting warmed up. That is what this weekly chart is suggesting. Like, this down move is just starting, all right? So that's why, like, I did jump back into my VIX position after I literally took my profits, okay? Then I jumped into it. Now, I did have a hedge, and that hedge did work out today, okay? But all in all, it would have been better if I literally just kept the profits out and then re-entered, okay? And yeah, I was pretty much right. I think it was with an hourly divergence is why I was starting to get nervous about my position. I was like, dude, we're probably going to start popping off, okay? Because you had this one back here, okay? And then you also had this one right here form, and that's when I was like, okay, like, it is pretty obvious that momentum is shifting here. We're probably gonna have a breather. So that was like, that's why I wanted to start taking my profits yesterday, and I talked about it about overall my trade management in yesterday's video. I suggest you guys apply trade management, okay? Like, it's not like you can't just sit back and relax, okay? You can in the end. Yes, that is what's going to pay off. We do know that, yes, the weekly chart suggests that we are going to be having a prolonged sell-off, all right? But there are going to be ups and downs, and I can tell you for a fact the contracts right now are nowhere near the highs that I got to sell at yesterday. And that is just an example of trade management, my friend, okay? Now, I did end up getting back into those contracts yesterday, the vast majority of them, and I did end up putting most of the money that's not in the contracts into the hedge, okay? And that did work out, but I would have been better just, you know, taking the profits and letting the analysis pay off, okay? And doing that. But all in all, it will end up working out. But what does the daily time frame suggest? The daily time frame, along with the hourly divergence we just saw and talked about, it was suggesting that you were going to start bouncing. Now, what I also will point out is that you do have your RSI stalling at the 50 mark. The 50 mark is important for the RSI, especially on the daily time frame. That is when the bears start taking control, okay? That's when the bearish pressure is winning the tug of war, okay? But yeah, everything is pretty much looking the same on the QQQ. Obviously, we are more volatile on the QQ, but you're getting your cross and your stochastic down here, and you're actually further down here. Now, what I want to show you is actually on VIX, okay? And this is why I thought we would be getting our cool off, not on that, on VIX, okay? Look at what is going on VIX, okay? I mentioned yesterday's video, the hedge only exists to fill this gap, okay? I bought that hedge specifically for this gap fill. I should get about 100% gains on that money, and then I will put that money into long on the VIX, going into it. And this line right here, what is this? This is the bottom of the VIX cycle bracket, okay? Credit to Sebastian. I don't know where he gets his cycle brackets from. I have no idea, okay? But what I can do is I can acknowledge that they work, okay? Like, there's no denying it. I made a whole video, not a whole video, but I talked about it for at least like 10 minutes, just on how we can be using the cycle brackets to our advantage and how they work, okay? And I pointed out exactly, if you just bought the bottom of the cycle brackets each time here and sold at the top of the cycle brackets, you would have continuously been raking in $10 to $20 moves, and you would have gotten like 5 of them on this way up. Now, you also could have bought you could have bought puts on the top of these cycle brackets on when we were in a downtrend here, and you could have sold at the bottom of the cycle bracket, so recommending that or suggesting that it's going to be the bottom, and you would have ended up getting, again, you would have nailed quite a few of those $10 to $20 moves on the way down. The point is, they weren't tricking us, okay? If a pattern is sticking, it's because something is working, okay? The pattern is showing something. And I'm not going to pretend like I know what the cycle brackets, like what caused the cycle brackets to start in the first place. No, I have no idea, but I do know Sebastian's inputs, and that's what I had. So go visit that video if you want to. I will re-add that to my chart in next video. I do not have time to do so today. I have to be leaving very shortly here, but now let's cover the VIX. Okay, so we talked about this gap fill right here. You have your stochastic crossing down on the daily time frame, and your CCI is tomorrow. It's probably going to give you your sell signal. Now, I'm just saying we could go into bottoming into the Jackson Hole Summit, and then we could rally, and that's when the bearish action starts. And that's what I was just suggesting at the beginning of the video. That's pretty much what the market needs. Like, straight up, okay, Jerome has to take the drugs away from the kid at this point. Like, it's a must, okay? And I'm not being impatient here. I'm just saying, like, the market does not understand what is actually probably about to happen, because it needs to happen because of that wealth effect I was just talking about. Like, things are just going to continue to spiral out of control if they don't do something within the upcoming months. We will have a very, very, very shitty 2023 if they don't do something in the upcoming months. But at the same time, we do have that inflation act that we talked about. We never went over the numbers on, and we actually can right now. 48 million times 10,000. All right, this is $500 million or $500 billion. We got $480 billion hypothetically is going into the into student loan forgiveness if you got a loan from the Federal Reserve. I'm guessing. Okay, that is a lot of money that's about to be again pumped into the economy. Okay, so like, even though we have the quantitative tightening going on, that is going to be something that is just going to trigger that wealth effect again. Okay, people are then going to have more money. They're going to be like, oh, I just got $10,000 relief. Oh, let's go out and spend $500. We're probably going to have a few months of stimulus. Okay, and I don't mean stimulus coming from the government. Like, technically, that is exactly what we just went over. Okay, the $480 billion that's coming from the Federal Reserve. Okay, that's new money that's being created, like I've mentioned on this channel. Keynesian system, okay, entire system is based off debt. The whole world is based off debt, which is pretty retarded, but it has worked this long, and it will probably continue to work with its cycles. Okay, people want to say, oh, Bitcoin is the answer, Bitcoin's the answer. Well, I'm just going to remind everyone, why would the US give up their only superpower? Okay, the dollar is their superpower. Okay, and actually, speaking of the dollar, we called out the dollar in a wedge down here. Okay, we said we had this breakout. I was actually here. We had this breakout right here, and look, we did end up coming back down. We ended up tapping this trend line, which is so flippin' cool. Like, look at this. This is cool. Okay, and I actually have this in the wrong spot now that I'm looking at it. Maybe it's in the right spot on the weekly time frame. No, it's still not. But yeah, you had your break and retest here, which is like the hook and go. Where you're going like that, and at the same time, you already hit your target on this falling wedge. You already hit it. It was the top of the falling wedge. So I don't know where you go from here. I have no idea, but what I do know is dollar is it's going to probably be over the next coming years pushing up there. Okay, it's probably going to do so because this is the price target of this falling wedge. So yeah. All right, guys, but that is pretty much all I have for you guys for this video. I am expecting, honestly, I'm expecting some bearish action to come out of the Jackson Hole Summit. If Jerome Powell is going to do what the market needs, like, straight up, like, this is something that is needed to happen, and if it doesn't happen, if he doesn't do it, then he pushes it further down the road until over here. These two lines right here are our next FOMC meeting. Like, straight up, if they push it down the road here, it's going here, okay? And the November one is actually, like, I think it's November, not October. I think it's October 4th. Or that's actually my birthday, guys, October 4th. But I do think we have October 4th and 5th as the next FOMC after that, or it's the November is like the 4th and 5th or something like that. But all I'm saying, guys, is we've had this time period that we haven't had FOMCs. This can be a replacement for what they do at the FOMC. And if they kick the can down the road here, it's going to be probably happening over here, and we can look for a sell-off to be taking place over here. But yeah, now that we did start moving back, hey, we do have this Fibonacci retracement right here, and I would not be surprised if this weekly time frame does end up with our weekly time frame sell-off that these oscillators are suggesting. Would not be surprised if we come and find ourselves filling this gap, which is right at the bottom of the golden pocket, and then reversing off of that. Okay, but yeah, guys, I'm looking for a few week-long sell-off, and this week I really don't think this week's going to just all of a sudden switch bullish. Maybe we get this cross here, and I mean, maybe we go a little, maybe we have a really green day tomorrow and we come up and fill the gap and allows the oscillators come up a little and then they can come crash back down. I don't know. Okay. I'm just giving you guys what I know. Okay. What factors that I have control over. Or actually I don't have control over, but I have control over what I do with these factors. And so do you guys. All right. Guys, please practice proper trade management. Okay. If you're up, just keep in mind what we had happen today and yesterday. You could have sold for great, amazing gains, okay, yesterday, okay? And if you just didn't take your profits, even if they were only 50% profits, if you didn't take your profits, you lost 20 to 30% of your profits today. I could tell you the contracts are nowhere close to where they were yesterday, all right? And, I mean, hey, we left this gap, and we said there was a probability that this gap was going to be, it was going to come back, and it was going to fill this gap. That's when I introduced that hedge, all right? At the same time, all right, we also mentioned that we probably could just keep going up, but it was all going to depend on this candle, okay? If this candle could not close over this 200 MA, over this right here, over 24, right around 24.50, if we could not get that closed, I said that this breakaway gap would then be turning into an exhaustion gap. An exhaustion gap is something that is where it's exactly how it sounds. It's where you gap up, and that's where the price will exhaust. That looks to be what we got here after this day of, I don't know if you want to call this confirmation or not, but I mean, if it was a breakaway gap, then we would have had this candle come up and it would have closed higher than that candle, and that would have been sexy. We did not get that, and that's why I personally thought it was very likely that we would come back and we would be filling the gap because, hey, exhaustion gap, no longer a breakaway gap. Breakaway gap would have resulted in us just flying. All right, but yeah, with that being said, I will catch you guys in the next video. I hope you enjoyed, and peace.